Hey, this is Rene. Welcome back to another video on this channel. And today I want to talk about a really interesting topic because I was asked, or I'm asked frequently, if I can turn around a system. So, for example, someone tested a strategy, an expert advisor over the last year, for example, and figured out that he has a pair of settings which is really bad. So, for example, usually they are trading in the 5-minute or 15-minute charts, for example, and they find settings and the equity curve is just dropping all the way. So the idea that they have is to just turn around the system. So whenever they buy, they will sell, and when they sell, they will buy. So turn around the system, and then the equity should go up all the way, right? So this is like the initial idea. And to show you one or two problems that might stand in between of you and this idea, I want to make this video. So let's have a look at what I'm doing here. I'm running a backtest in the background already, and you can see this is the scalping project expert advisor that I talked about on this channel often. You can do this with any strategy, but I chose to do it with this strategy because a lot of people know this strategy already on the channel. Just to explain this really quickly, it searches for the last highs and lows and then trades the breakout. For example, if we have like this high here, the price jumped above the high, so there's this breakout, and then there's an aggressive trailing stop as soon as we are some points in profit. So this is when we make a profit. And yeah, you can see this is what the strategy does all time. So we're just trading these breakouts and we are generating profits in the best case. For this test, I am currently using the 15 minutes time frame and a bars N input of 5, and I'm using a fixed lot size. Also, I didn't change the TP and SL points and the TSL trigger points. This is like pretty much always the same. And I will run this backtest now, and then I will run the same backtest with the exact same settings for with a reversed strategy. So I will turn around the strategy, and I will explain this in a second, and then we will see if the equity is then, or the balance is then better than for this test. Because as you can see here, these settings seem to be like really bad. So the original scalping strategy doesn't seem to work in GBP USD for the settings that I just mentioned. So I will just speed up the backtest, and then I will get back to you with a reversed strategy. Okay, so the first test is finished with the original system, and you can see this test is really bad. So we will just turn it around, right? But before we do this, we will have a look at one or two things here. So first of all, what we can see here when we have this visual test activated, we can see all the trades listed, and we can see the profit that we made. And the profit that we made is done by the trading profit and also the swap and also the commission. And you can see the commission is what we pay for every single trade. And this position alone, like the commission, is eating 900 USD of our account. And also there's the trading profit, like the profit that we made in the market, which is a loss of 1,200 USD roughly. And this profit is, of course, or in this profit, we also have hidden costs like the spread and slippage, and these things also add up in this profit column here. So the profit is of course influenced by the spread and slippage. And for example, if you say now your broker does not charge any commission for trading, this might be true, but in this case you will have a larger spread. So you will still have a big negative influence on your trading profits. And you can compare, like a lot of brokers have different account models, and you can choose, like for example, a raw trading account and a spread-based account. And if you like do the math, you will see that it pretty much is the same. So you can pay either commission or you pay a larger spread, but in the end it's the same. So let's keep in mind that we paid a lot of commission and we made a loss with trading. So what we will do now is I will choose another program, and this time it will be the Scalping Project EA Reversed. This is a program that I just created. So let's have a look at the inputs, and you can see the inputs are completely the same. Time frame 15 minutes, bars N is 5. We use a fixed lot size. Oh, the TSL trigger points were 40 before, I think. So we're choosing 40 here. And wait, do we use the drawdown monitoring before? I will have to check this so we can make sure that we use exactly the same settings. No, it was false. So we will have to turn it false for the reverse test too. So what we do here is we go to drawdown monitoring false. And so now we should have the exact same settings. So if I start this backtest, we will see, or we should see that we're always winning pretty much, right? So first of all, let me explain to you how this works. It pretty much just turns around the original system. So wait a second. So you can see like down here where we normally saw the sell stop order, we now have a buy stop order. And up here, which was a buy stop before, is now a sell limit. So we pretty much just turn it around. Also, once a position is activated, we will turn around the trade management. So let me wait until a position is triggered here, because I turned around the trailing stop pretty much as good as you can do it. Because now you can see we have this buy position at the lows. So with the previous system, we would have activated the trailing stop as soon as the ask price is 40 points below the entry. And now I cannot do this anymore. So what I did is wait, you can see it in the operations here. I'm not modifying the stop loss, but I'm modifying the TP as soon as this buy position goes into like the negative area. So this is why these trades are now stopped pretty much at the TP. But this is like the best way I was able to turn the strategy around, right? Because yeah, this is how the original strategy works, and I just wanted to turn it around. So we are losing pretty much if the price drops below the lows, and we are winning if the price reverses. So this is just like the original strategy reversed. So what we can see now is that this is going, not so well. So this is not what we would expect, right? But let's wait until the test is finished, and then we will do a quick summary. So guys, the second test is now finished, and you can see here it is not looking great. So the equity pretty much looks the same. We are losing all the way, and the question is, why is this happening? So let's have a look at the trades, and you can see all the trades are done here. We can scroll all the way down to see like the summary here. Oh wait, this is not where I wanted to go. I want to go to the history. So you can see we still made a profit, we still made a loss, a trading loss. And we still had like this really big commission negative here. And the problem is, commission is easily explained. We always pay commission when we trade, and we pay this for everything we trade. Like the first thing that I realized here is the commission is smaller for this second backtest where we trade like the reverse strategy. And this is because we probably made less trades. And this might be a bit weird for you, but this is a good way to understand how the ask and bid price influences your trading if you are working with pending orders. So for example, at this level, like for the normal strategy, this would be a sell stop order. So a sell stop order is executed whenever the bid price, like the smaller price, is reaching this order. But now for this reverse strategy, this is a buy limit order. And the buy limit order is only executed if the ask price, so the higher one, the higher of the two prices that you always have, if the ask price drops below this level. And this is really important. So the visual bid price has to drop even below this level to execute the ask position, which is executed at the ask price, obviously, the buy position. So this is why a lot of times when the price just touches this level barely, it does not execute the buy trade. So this is why there's a difference. Also, the same thing applies for buy signals. For example, if you have, for example, here at this level, there would be a buy stop order for the normal setup or for the normal strategy. So if the price here would have went a little bit higher, it would have triggered this buy stop order. But it would have triggered the buy stop order as soon as the ask price reaches this level, which means that the bid price is a little bit below this level. Now, with a new system, we now trade a sell limit order up here, which means that the bid price has to jump above this level to trigger this sell limit order. So again, it could be the case that a buy stop order for the normal system would have been executed, while for the reverse system, the order wouldn't even be triggered because the price did not move far enough in the direction of this order. So you can see this is what makes the difference in the total amount of trades. And this is why we see less trades for the second test. Now you might say, what happens if we are working with market orders always? This would take away this difference. I mean, in this case, if we just observe the bid price and we check if it drops below a low or above a high, then we trigger a market order. So a position is directly open without pending orders. In this case, we would have the same amount of trades, but still we would have a huge commission position. So we would have a lot of commission paid because this commission is always there. And also if you're working with market orders, it still affects the profit section here. So you still pay the spread, of course. And I mean, you might have the same entry price or the same trigger price for your positions, but it's not the same entry price. Because still, buy positions are opened at the ask price, sell positions are opened at the bid price. And this is something you cannot avoid. There is no way around this. You cannot modify your code to change this. And this is the most important thing you have to understand. And because you have, because of the commission and the spread and the slippage and the swap, these are all the things that will have a negative impact on your trading. This is why in 90 or 99%, or let's say 90% of all the cases when you are trading a strategy on a low time frame with a lot of trades and you see a really bad result, you cannot turn it around. It will just not work. This is why on this channel, I always try to stress the importance of trading costs, which is commission, spread, slippage, all of these things. I sum them up as trading costs, and all of these things have a negative impact on your trading. And this is why if you're turning around a strategy, if you just turn it around, it will look like this. If it was bad before, it will be bad afterwards. I mean, the profit might be a little bit better, a little bit worse, but if you are trading on low time frames with a lot of trades and small TP and SL distances, it will most likely look like this, because trading costs are just too high. And this is like the only reason why 80 or 90% of all traders fail, because of the trading costs. It's not because they are unable to trade. I mean, even if you have no knowledge at all, it's like a 50-50. You might win some trades, you might lose some trades, but because of the trading costs, it looks like this. So this is why you cannot turn around a trading system in 90% of all cases. And I hope I was able to to demonstrate why it is like this. So let me sum up like the most important factors. What I always recommend if you're trading like automated or manual, do not trade on low time frames like the M5, the M15. You get a lot of signals, but I mean, it doesn't help if these signals are shit. So trade on higher time frames. I usually trade from the 1 hour time frame or upwards. And also less trading is sometimes more, because you do not have so many trading costs. And yeah, also like you should focus on symbols that have a low spread and that might work with your strategy. For example, the GBP USD, it has a bigger spread than Euro USD or USD Japanese yen, like in general. So this is why this strategy, which is really sensitive to the spread, performs worse on the GBP USD and it performs better on USD Japanese yen or Euro USD. So I hope I was able to clarify this. Thanks for watching. Have a great time and good trades. Bye bye.